Welcome to The Explainer. Today, we're diving into a massive, frankly momentous leadership shift happening right now at one of America's most fascinating energy giants, Occidental Petroleum, or as it's commonly known, Oxy. We're going to break down exactly what this transition means for the company, and really for the broader energy landscape. It's a huge question, right? After a decade of truly transformative and, sometimes controversial leadership, Vicki Hollub is officially retiring on June 1st, 2026. Stepping into her shoes is current Chief Operating Officer Richard Jackson. Now, to really understand where Jackson is taking Oxy, we first have to look under the hood at the absolute powerhouse of an engine he's inheriting. Okay, let's start with part one, the fortress of the Permian. See, Occidental isn't just your run-of-the-mill oil company anymore. They've built this incredible domestic stronghold that analysts literally called the fortress of the Permian. To put that immense scale into perspective, just look at their first quarter of 2026. They had a staggering 1.43 million barrels of oil equivalent per day. I mean, they blew past their own guidance, completely firing on all cylinders across the Permian, the Rockies, and the Gulf of Mexico. And what's wild is they're achieving this massive scale while simultaneously streamlining. In early 2026, Oxy finalized a highly strategic $9.7 billion all-cash sale of its chemical business to Warren Buffett's Berkshire Hathaway. The whole goal here? Simplify the core business model, retire high-interest debt, and create a much leaner, laser-focused Oxy. Which brings us to part two, Vicki Hollub's transformational legacy. To grasp where Oxy is heading next, you've got to look at the foundation Hollub built. As the very first woman to lead a major American oil company, her 10-year tenure was, it was a wild, risk-taking ride. From the highly debated $38 billion Anadarko acquisition back in 2019 to sheer survival during the pandemic crash, doubling down again with Crown Rock in 2024, and finally, that recent OxyChem sale. She practically doubled the company's reserves and totally rewired its DNA. So, what's the final result of that relentless 10-year transformation? A substantially more domestic, lower decline portfolio. Today, a massive 88% of Oxy's total oil and gas resources are located right here in the United States. That safely insulates them from the kind of geopolitical volatility that so often plagues international assets. All right, part three, enter CEO Richard Jackson. With that fortress firmly built, the torch officially passes on June 1st, 2026, to current COO Richard Jackson. And the contrast in their mandates is pretty striking. Hollub's era was defined by those aggressive acquisitions and, frankly, survival mode. But Jackson? He's been with Oxy since 2003, and he steps into a totally different reality. Management is crystal clear here. No more transformative acquisitions. Jackson's era is all about organic growth and relentless execution. Essentially, he's here to fine-tune the massive engine Hollub built. Let's dive into part four, the execution and debt mandate. You can literally see this obsession with efficiency in Jackson's strict 2026 playbook. His team is planning to actually drop capital spending by 8%, bringing it down to that $5.5 to $5.9 billion range. Yet they still expect to grow production by 1% to reach 1.45 million barrels a day. Add in a targeted 7% improvement in new well costs, plus carving out another $500 million in operational savings. It's an absolute masterclass in doing more with less. Now, all of that operational efficiency flows directly into one massive priority, debt reduction. As of the recent quarter, Oxy successfully scaled its principal debt down to $13.3 billion. That is a staggering achievement when you remember this debt peak was sitting at nearly $40 billion back in 2019. But Jackson isn't stopping there. The explicit near-term cash flow priority is to reach a final summit of exactly $10 billion in principal debt. Hitting that specific milestone is the key that unlocks the next major phase of value for the whole company. And here is exactly why this matters so much if you're tracking this stock. Hitting these debt targets isn't just some abstract corporate accounting exercise. By retiring this debt, Oxy dramatically slashes its interest payments. Management projects that by 2029, this alone will free up a whopping $1.2 billion in improved free cash flow compared to 2025. Think about that. So once they hit that $10 billion mark, Jackson's team has a very rigid capital allocation playbook. Step one, hit the debt target. Step two, start hoarding cash on the balance sheet so they can redeem preferred equity in August of 2029. And step three, strongly reward the shareholders through opportunistic share repurchases and continuous, steady dividend growth. We're actually already seeing the tangible results of this fierce financial discipline. Because their break-even costs have gotten so incredibly low, Oxy was recently able to boost its quarterly dividend by 8%, bringing it right up to 26 cents per share for 2026.
Finally, Part 5, betting on carbon capture.
There is one final, absolutely critical pillar to Jackson's strategy that makes Oxy totally unique among its traditional peers. They are making a huge bet on carbon management. The crown jewel here is Stratos. This is the world's largest direct air capture facility, custom designed to pull 500,000 metric tons of carbon dioxide straight out of the atmosphere every single year. Phase 2 construction is completely done, and they are actively evaluating commissioning progress right now. But here's the really interesting part. Oxy isn't just capturing carbon just for the sake of it. They essentially view capturing CO2 neutrally, as a direct mechanical tool. Through a fascinating process called enhanced oil recovery, they take that captured carbon and actually pump it deep down into mature, aging wells. That pressure forces out extra oil that would have otherwise been left behind, and in the process, it permanently traps that carbon safely underground. It all really comes back to this core vision. Incoming CEO Richard Jackson puts it perfectly. We have a tremendous opportunity to focus on organic improvement in execution to deliver meaningful value from our high-quality resource base. He is entirely 100% focused on taking those incredibly diverse assets they've assembled over the last decade and optimizing them to their absolute peak potential. So as the torch passes from a leader who completely transformed the company's footprint to one obsessed with efficiency and execution, it leaves us with a pretty compelling thought. Will Occidental Petroleum's dual focus, striving to be an ultra-efficient traditional driller while simultaneously pioneering as a carbon management company, set a completely new standard for the entire energy sector? It's a fascinating transition, and for sure, one the whole industry will be watching closely. Thanks so much for joining me on this explainer.